Okay, the day's lowest point now, 214 points, 18,206 is where we are at. Inching closer to the November lows of 18,133, and that practically is the medium-term kind of level to watch out for on the downside. Now, Jefferies, the broker, has released its India strategy note as we wind down this year. Some interesting takeaways. Vivek has gone through the note. He's standing by with what he thinks stand out. Vivek, over to you.
Well, that's right. Very interesting strategy note coming in. And what we are highlighting is, the kind of portfolio changes they've done as far as the model portfolio is concerned. So as the year winds down, they've made some tactical changes and, along with the rationale, they have highlighted the changes that they've made. So number one, recently Jefferies had raised quite a bit of cash as far as their India holdings was concerned. And they've now started deploying that particular cash into the metal sector. And also what they've done is they've shifted weight, from their holdings in Bharti, Zomato, as well as Maruti. And they've put this particular money into L&T, RIL, as well as the banking pack. Also, what they've done, they've gone ahead and added Tata Steel and Hindalco to the model portfolio, where because of that, the material sector rating has now gone to neutral from the current positioning that they had, which was nil. Also, what they've done, industrial sector is something that they like, so they've added weight to L&T, and now the industrial sector positioning has gone ahead and been increased to an overweight stance. They've added weight to RIL as well, and funding into metals has partly been done by removing cash from the portfolio, so deployed cash, as well as trimming their stake as far as Zomato is concerned. They've gone ahead and shaved or trimmed some stake and some weightage from Maruti, and this they've once again put it into banks. Also removed Bharti Airtel from the model portfolio. Now, looking at the rationale, number one, the additions that we mentioned earlier, metals, what they're saying is that the China reopening as well as the US rate peaking out is something that they believe can add further sentiment as far as positive sentiment as far as the metal space is concerned. L&T, they're seeing a pickup in the broader capex, and they also feel that order inflow here can be quite strong. RIL, what they believe is that the core, oil to chemical business is something that will see increased business profitability, and petchem margins too will improve on the back of China reopening. On the other hand, some of the stocks where they have seen cuts, the rationale behind that, Zomato, they are incrementally wary, of potential rise in competitive activity in the sector. As far as Maruti is concerned, they see potential headwinds to discretionary consumption on the back of slower wage hikes, as well as the IT sector weakness. And lastly, coming to Bharti Airtel, they are saying that concerns on rising 5G capex, as well as the company not being able to raise tariffs as much as they would have liked, is something that they believe bodes reasonably negative as far as Airtel is concerned.
All right, Vivek, thanks a lot for taking us through, all of the details of that note. But